to share a little bit about self-employment taxes. I think you probably all know or have heard of self-employment taxes, and you know it's a thing that you have to pay for your business, but today I wanted to dive in a little bit deeper about what they really are, what makes them up, and how they differ from income tax. So I'm going to share a little bit about that with you. Let's see here. So when you file your annual income tax return for your personal taxes, you are essentially paying two types of tax on your business profit. The first one is regular income tax. So think of that one as the tax bracket tax. That is what income tax is. And then the self-employment tax is an additional combination of a couple taxes that's taxed your net profit. So, like I just mentioned, you not only have two types of main taxes on your tax, but then we can break down self-employment tax even further into Social Security tax and Medicare tax. And in 2020, the Medicare tax was only on the first $137,700 that you've earned. So that is the breakdown of those taxes. And a lot of people ask, how do I contribute to Social Security? And this is your way. So there's, you don't have an employer withholding this and submitting it for you. You, by having your name on your Schedule C or your name on your share of the partnership income or S corporation return, that gets coded to your Social Security number, and then the tax is also reported that way. So this is essentially how you contribute to that without having W-2 income. And, if you're looking on your tax return, you're going to see the self-employment tax a couple places. You're going to see it on a form called Schedule SE, and that's where the complex calculation will be shown and how you can see how it's calculated. Then that number flows through to your 1040. So you will see a line item on there for your self-employment tax. You will also see a deduction for half of your self-employment tax. And the reason for that is if you were an employee of a company, your employer would pay half of your Social Security and Medicare tax for you. It's just a regular business expense as an employer. But since you're self-employed, you have to pay both sides. So the government is saying, okay, we're going to let you deduct that. It'll reduce your taxable income. It doesn't reduce your Schedule C or, your self-employment income, but it reduces your taxable income on the overall 1040 side of things. So just keep that in mind. That's where you're going to see it. If your net self-employment income is below $400, so that means if you have a loss or your profit is below $400, you're not going to see self-employment tax for that business on your return. So, that's just short and sweet what self-employment tax is, how it's made up, and in order to save for that tax, that's, you pay that in with your quarterly income tax payments, the things that are a lot like deposits towards your year-end taxes. You can plan for about 30%. That's roughly 25 to 30% is a good amount to be setting aside for those quarterly taxes, which are a combination of your income tax and the self-employment tax. So that's a good rule of thumb. They end up being right around there. If you fall into a higher tax bracket, you can plan to set aside more, but that's why we help you guys with those quarterly tax calculations each quarter so that you can kind of verify that you're on the right track with how much you're setting aside. If you have any questions about the self-employment taxes or how much you should be setting aside, just let me know. Thank you.